Good morning YouTube, welcome to the financial information channel. In this video I'm going to give you the 5 stocks that you might be able to either put it on the watch list, buy the stocks, trade it, or invest during the month of June. So let's start with the video. Now, as a disclaimer, this video is just to give you that information about certain stocks, and I'm just gonna give you that information so you can make a decision to either invest into the stock, trade the stock, or if you wanna sell the stock if you already have it under your account. And you can actually put these 5 stocks into the stock watch list and then later on make a decision. Now let's start with the video, and the number 5 stock is gonna be Supernus Pharmaceutical. Now the stock ticker symbol is SUPN. Now Supernus Pharmaceutical is one of the biotech companies, and the company is mostly focused into the central nervous system. And they actually were approved by 2 drugs in 2016. Now both of those drugs are used to treat epilepsy. Now I'm gonna put on the screen what are the names of those 2 drugs, because both of those drugs were used to exceed 210 million in sales in 2016. Now both drugs represented 46% of growth over the previous year. And one of the most impressive things is that the EPS was around $1.76 over the previous year. That was a ridiculous 528% over the previous year. That is unbelievable. Now they gave good guidance because they are expected to grow 26% over the previous year. And the company is actually doing 2 drugs that are in trials. Now the main thing about the biotech companies is that they actually need to be approved by the FDA. However, that is one of the main risks when you start investing into a biotech company. In my opinion, this company has grown a lot for the 2 drugs that they already were approved. Now imagine if they were approved for those 2 new drugs that are on trials, the price is gonna go even a bigger amount in 2017. And the best thing is that most analysts predict this stock to around 26% annually. And the price to earning ratio is under 20. Let's look at the stock price. The price at this moment is $35.75. The market cap is 1.8 billion. The market beta is 2.20. The PE ratio is 19.23. The next earning date is on July 31st, and the stock is very close to the 52-week high. The 52-week high is 36 with 5 cents, and the forward PE is $21 with 80 cents. You're gonna see that on the screen at this moment. Now let's look at the financials, because when you're investing in a company, it's very important to get an idea how they're doing. Now I'm gonna put on the screen their gross income, and I'm just going to read the 2016 numbers. So in sales and revenue, they did 215 millions, and as a gross income is 203 millions. As you can see, it has gone up a good amount every year, which is very important. Now let's take a look at the net income. Now the net income is after everything has been paid. As you can see, in 2016, the company did 91.22 millions. Now let's take a look at the balance sheet of that company. In 2016, they have 90.12 millions in cash and short-term investments, and that has been the highest that they have had throughout their history. Now let's take a look at the liabilities of that company. They don't have any short-term debt. However, they have 31.45 millions in debt. The good thing is that they don't have any short-term debt and they have more cash, so they can actually pay that amount if they want. However, I think they're going to be using the cash so they can actually do multiple trials just to make sure that those 2 drugs are FDA approved. And one last thing, we're going to see how the company has done in 2017. As you can see, they have gone up 41.58%. In January, they went up 7.13%. In February, they went down 4.99%. They had a huge gain in March with 21.79%. April, they have gone up 4.15%. And in May, they have gone up 9.36%. Now, as you can see, this is a small cap company, so it has a huge chance of moving up. If those 2 drugs are approved, it's gonna make the stock go up quite a huge amount. Now let's go to the next stock, and the number 4 stock is gonna be Logitech. The stock symbol is L OGI. Now this company has made a huge return in the last 12 months. It has gone up 120% in the last 12 months. Now one of the things that it made the company grow a huge amount is retail sales went up 14%. That has been the highest in about 6 years. Their sales is 2.21 billion. It was up 9% from the previous year. Now this company, even with the huge return in the last 12 months, I think it's a good value. And they do sell a lot of accessories. They sell Bluetooth speakers, keyboards, mice, and now they do a lot of video conference cloud services. And I was impressed because they have quadrupled their profits in the last 4 years. In addition, they have accelerated their growth in those 4 years as well. And they do an excellent job of cutting the cost. I'm going to put on the screen the percentage that they're able to cut the cost. That has been one of the keys so they can improve their margins and generate a bigger revenue. Now let's take a look at the Logitech stock price. Now the stock price for Logitech is at 36.92 cents. We're really close to the 52-week high at 37.12 cents. It has a market cap of 5.87 billion and the PE ratio is at 31.83 cents. They do not pay a dividend. Now I'm going to put on the screen their forward PE ratio, and their forward PE ratio is at $23.22. It is quite low in my opinion because it has a low market cap. Now let's take a look at the company financials. Now the Logitech financials, we're going to look at the sales and revenue. And in 2017, they had a 2.18 billion in sales and revenue, and as you can see, it had gone up since 2015. The gross income in 2017 is at 795 million, and now we're going to take a look at the net income. And in the net income, they had 189 millions. Every year the net income has gone up. Now let's take a look at the balance sheet. Now in the balance sheet, Logitech has 548 millions. This year has been the highest that they have had in their company. Now let's take a look at Logitech liabilities. They don't have any short-term debt and the company doesn't have a long-term debt. Now you can see the company doesn't have any short-term debt, any long-term debt, and it has quite a good amount saving the cash and cash equivalent. And they have a good amount of money just in case something goes bad. Now this company is one of the companies that's gonna go up quite a bit amount every year, and that is actually what you need sometimes in your account. And that is a company that we all need in our accounts, a company that is very reliable. Now the next stock is one of the stocks that has gone up a huge amount in the last year. And the number 3 stock is gonna be Universal Display. The stock symbol is OLED. Now before I go into the numbers, I'm gonna tell you that this company has a huge potential. Even though that it has gone up a huge amount this year, it still has a lot of room to improve. The company creates organic light displays, and those displays can be used on television and mobile devices. And they have been working on their production because they're gonna get a lot of orders. Now one of the things that most people anticipate this year is that Apple is gonna start using those type of displays in their newest iPhones. And that's gonna move the stock price even to a higher amount and improve the revenue. Now if you have never compared an OLED to a regular LED display, I'm gonna challenge you because the technology for OLED is way better. So when you get a chance, you can actually check a video on YouTube so you can compare the OLED panels to a LED panels, and you will see a huge difference. But even better, when you go to a store, compare one of the TVs so you can actually see that for yourself. So I think OLED is the future for most of the TVs and mobile devices. But let's take a look at the numbers so you can get an idea how they actually announce their latest earnings, and you can get an idea how they're doing so far. So in the quarter of 2017, they had a 55.6 million. Compared to 2016, they had 29.7 million. That's an 87 year-over-year growth. And the net income was 10.4 million compared to 1.9 million in 2016. That is a 447.4 year-over-year growth. And the earnings per share was 22 cents compared to 2016, which was only 4 cents. That is a 450% year-over-year growth. And that is only the beginning. The OLED has a lot of things that is going to happen for them in the next few years. Now the company has gone up a huge amount. That's one of the bad things, but I think it still has a lot of room to improve. Now I'm going to show you the numbers first thing we're gonna take a look at the stock price. Now the stock price is at $115. The 52-week high was $118. It has a market cap of 5.41 billion. The beta is 1.40. The price to earning ratio is 95.91. Now the price to earning ratio is a little bit high. However, keep in mind the company is still growing and it's gonna grow up even more. Now let's take a look at the forward PE, and the forward PE is 45 with 28 cents. That is decent in my opinion because the company is in a huge growth mode. Now with this company, the future looks very bright. But now let's take a look at their financials just to see how they have managed their money and if they have any debt. The Universal Display Corporation on their sales and revenue, and in 2016 they had 198.89 million. It had gone up every year, and that is what you like to see. And the gross income in 2016 is 150.28 million. Now let's take a look at the net income. Now in the net income after everything has been paid, they have 47.34 million. Now it had gone up in the last 3 years, which is a good sign. Now let's take a look at the balance sheet to see if they have saved any money or if they have any debt. Now in the balance sheet, they have a cash and short-term investments in 2016 of 90.12 million, and that is the highest that it has been in the company history. Now let's take a look at the company liabilities. Now in the company liabilities, they don't have any short-term debt and the company doesn't have any long-term debt. Now we're going to take a look to see how the company has improved in 2017. We're gonna take a look at the following screen just to show you the complete numbers. In 2017, the company has gone up 104.26%. So basically it has doubled the stock price. That is very impressive. In January, it went up 17.23%. In February, they went up 28.56%. In March, they barely went up 1.47%. In April, they went up 3.77%. And in May, they went up 28.71%. Now, like I mentioned earlier, I think the company still has a lot of room to improve, and especially if the new rumors about the iPhone becomes true. Now, there's a chance that the stock might pull back. However, I would see that as an opportunity to start, getting some shares. The company has a bright future, and as you saw, their financials are actually improving every year, and they're actually improving their production facilities. I'm gonna do a stock review about this company so you can get an idea how the company has moved up in 2017. And I do know the company has a high price to earning ratio, but that is because the company has grown a huge amount. Just as you saw, it has doubled the price. Now for the next two companies, I had them change several times between number 1 and number 2. However, I came to the conclusion that number 2 was more fitting for this company. Now, the next company, which is the number 2 company, is Alibaba. The stock symbol is BABA. Now, you know, Alibaba is the version of Amazon. However, it's located in China, and they're doing a great job. The revenue has gone up a huge amount in the last few years, and they have been able to expand into different products besides the retailer space. They are doing a lot of cloud computing investments and a lot of media services. And one of the things that I read is that Alibaba was planning to launch a food service program. It will be similar to Uber Eats, that where you actually are able to order food and they will be able to deliver that food into their houses. Now keep in mind that China had the highest population in the whole world. Now in the latest fiscal year, Alibaba was able to grow its revenue by 60%. That is a huge amount. Now this company has gone up around 40% this year, so I do think that the growth is gonna slow down a little bit. I see the price target of around 135 before they report the next quarter. Now let me show you the stock price so you can get an idea to see if it's convenient for you to invest into that stock. Now the stock price for Alibaba is 123 with 99 cents. The 52-week high is 126 with 40 cents. And they have a huge market cap of 313 with 69 billions. And the PE ratio is 50 with 36 cents. Now they actually have a huge PE at this moment, but the forward PE is only $22 with 10 cents. That is less than half for a huge company. And they're doing an amazing job in following Amazon footsteps, and they're expanding and diversifying their products. Now we're going to take a look at the income statement, the balance sheet, and how the stock has moved in 2017. So the first thing we're gonna take a look at the Alibaba income statement. And the sales and revenue in 2017 was 23.47 billions, and the gross income in 2017 was 13.89 billions. Now let's take a look at Alibaba net income. And as you saw, in 2017, the net income is 6.48 billions. It actually went down over the previous year, and the reason is that they were expanding in the digital media services. So they spent a lot of money acquiring and advertising those services. Now let's take a look at Alibaba in the cash and short-term investments. In 2017, they had 22.27 billions. Compared to 2016, that amount actually went up in 2017. Now let's take a look at Alibaba liabilities. In 2017, they had a short-term debt of 863 millions. In 2017, they had 863 millions. And as a long-term debt, they have 11.15 billions. So they have a good amount of debt, but they are able to pay that amount if they decide to, because they actually do have a good cash flow management. Now let's take a look to see how Alibaba has gone up in 2017. Now as you are seeing in the screen, Alibaba has gone up 41.20%. In January it went up 15.37%. In February 1.57%. In March 4.79%. In April 7.11%. And in May another 7.38%. So even though the company has gone up a huge amount, I see the growth continuing for the remainder of the year. So Alibaba is a good stock that has a lot of growth potential, especially because they are still in the early stages for those investments that they have done in the last year. And they're expanding into more services. The food delivery program that I mentioned earlier is going to help them grow even to a faster pace. And Alibaba is one of the stocks that is rarely mentioned when people mention fancy IPOs. Just keep in mind that this stock has gone up a huge amount. Only Facebook has gone up a bigger amount from 2012 to 2017 in terms of IPOs. Now the next stock is the number one stock for the month of June in my opinion, and that stock is called Applied Materials. The stock symbol is AMAT. Now this company has been going up quite a bit amount since 2015, and I think it has only missed one estimate in the last 3 or 4 years, I believe. Now Applied Materials sell the tools to the companies so they can make chips or displays. In addition, the company designs automation softwares and make components for the solar industry and the display technologies. Now this company is one of the companies that is growing up a huge amount. It has gone up 129% in the last year alone, and the revenue was up 45% over the same period last year. The company has crushed the Wall Street numbers for the last 6 quarters. That is an unbelievable number. That is one of the many things, because their guidance has improved for the third quarter. So at first the company expected to have a 60 cents per share EPS, but now the company improved the guidance, and it has improved the guidance to 79 cents per share. Now you would imagine that this company has a huge PE ratio, however at this moment it's really low, and I'm gonna go over the numbers in a bit, but first let's take a look how the company can grow the revenue a little bit more. Now the CEO of the company, Gary Dickerson, he said that 50% of the OLED orders are coming from new customers. That is good news for Applied Materials and for the third stock that I mentioned earlier, which was Universal Displays. Now keep in mind the OLED market is a little bit new, so that is one of the ways that they're going to be able to improve their revenue. And the other thing is they actually improve their revenue in the cloud computing. Now keep in mind that most companies need to make massive investment into processors. Now keep in mind that most companies are going to do a lot of huge purchases for processors when they do a lot of advertising online. So it's going to drive a huge amount into that space for Applied Materials. Now one of the analysts predicted that the cloud computing space is going to spend around 1 trillion between 2016 and 2021. That is a huge opportunity for Applied Materials, so they can actually generate even more revenue. Now let's take a look at the stock price to see how the stock is doing so far this year. So as you can see, Applied Materials is at $45 with 50 cents. The 52-week high is at $45 with 74 cents. It has a market cap of 49.13 billions. The beta is 1.83. The PE ratio is 18.82, and the next earning date is on August 17, 2017. They have a dividend, and the dividend yield is 0.88%. That is actually a plus that they're paying a dividend. So the PE right now is 18.82. However, the forward PE is at 14.09. That is a really low PE in my opinion, because the company is growing up in revenue, in EPS, and is beating the analyst. So it is really a good value at this price, and even if it goes up a little bit more, it's still gonna present a good value. Now let's take a look at the income statement, the balance sheet, and to see how the company has moved so far in 2017. So the first thing we're going to take a look is the sales and revenue for 2016. In 2016, the company went up 18.83 billion, and it has gone up every year since 2013. And the gross income for 2016 is at 4.53 billion. Now let's take a look at the net income. In 2016, they went up 1.72 billion. And as you can see, it has gone up every single year. And now we're going to take a look at the balance sheet. The first thing we're going to take a look is into the assets. So the cash and short investments in 2016, they have 3.75 billion. So they have a good amount. However, it went down from 2015. Now we're going to take a look at the company liabilities. And the first thing is the short-term debt, and they don't have anything in the short-term debt. Now we're going to take a look at the long-term debt, and they have 3.14 billion in long-term debt. In 2017, the company had gone up 41%. In January, it went up 6.14%. In February, it went up 5.75%. In March, 7.40%. In April, 4.40%. And in May, it went up in double digits at 11.99%. So as you saw, the company had good financials and is improving their margins and the revenue every year. The company represents a good value because it's really low price compared to how the company is generating a lot of revenue. Well, that's going to be everything for the 5 stocks to buy during the month of June. Please keep in mind that this video is just to give you information about the stock markets and these companies. You can make a decision to invest, to trade, or just to put these stocks into the watch list. And make sure that you leave in the comment sections which of the 5 stocks do you like the best to either put on the watch list or to buy the stock. And as always, I want to give you the thanks for watching the video. Make sure that you subscribe to the financial information channel, and I'm going to continue bringing videos so you can make the decision to invest into a stock market or just to get an idea how the stock market works. Thanks for watching once again, and have an excellent day, and take care, my friends.